Hi folks, Nick here recapping the day, March 31st, last day of the quarter. Scoreboard, let's start with the open. We opened red, but was kind of orderly, but the close was pretty scary. Worrisome to the traders a little longer term than just today is the fact that Friday markets will be closed, so they won't be able to actually trade the labor numbers, which are in focus, right? So that's a little troublesome. This puts extra emphasis on tomorrow's open because tomorrow we get the preview of the Friday, which is the ADP number. Sometimes it's off, but it's better than nothing, so they'll look at it more importantly than the usual because of the fact that they can't trade Friday. So if it comes in line, then nothing will happen, and we'll just open with a negative bias because of what happened today. However, if we get a number that is way worse than expectations, and I think expectations are around 240,000, and if it's much lower than that, so worse than expected, it may cause a tizzy in the markets. So, and a much higher number will probably be discounted, maybe a little pop of relief that, oh my gosh, thank God, it's not disaster. However, we could pop on a couple of headlines that I foresee, not likely to happen, not absolute calling for it, but these are two that could come out. An Iran deal announced before the open would cause oil to crash, in my opinion. And this will probably cause a rip in the markets. A, because, hey, happy Iran not going to have nuclear weapons, and B, low oil means better economy, more spending on the retail side. Okay, two, a deal or at least a prospect of a deal in Greece. Today was kind of bad news. So that will also cause a rip in the markets. However, that rip I would short because it's a relief pop, a relief that something bad did not happen in Greece or has a chance of not happening. So I say it was scary at the end. Why? Because I think the bulls averted a disaster today. And that's on the good side, and I'll show you in pictures. But however, they also missed out on the opportunity to capitalize on a bounce from Monday. So yesterday, me calling it a dead cat bounce was a little more on the money than not. I did say give it some room just because of the China aspect of it. So the bounce yesterday didn't turn out to be a platform for more potential upside, at least not today. There's no conviction in the long thesis. I have a lot of conviction in the short thesis. My opposing traders don't, meaning they bail on their thesis at the drop of a hat. Why? Because that's what we call weak hands. They have new money, new profits, and they're not willing to lose it. It's a sign of a trouble. They're going to sell first and ask questions later. Low conviction makes it easier for me to short than go long. I'm not a perma-bull, but this is the setup that's been playing out for a while. The small caps, again, held up better than most broader indices because they tried to even go green at one point. So again and again, we see outperformance, relative outperformance from the small caps, and I'll show you that in pictures in a little bit. What you're seeing at here is what happened in the day for a whole bunch of tickers and stocks. So let's put in Facebook here. All right. So the Dow ended up minus 1.1%, SPX minus 0.9%, NASDAQ minus 1.1% and change. The RUT, which are the small caps, minus 0.4, so about half, twice as good, half as bad of the broader indices at least, and more on the small caps. And that's a basket of 2,000 stocks. Let's see if we can put it in pictures. That's the S&P 100, Qualcomm, AbbVie, and that's it. Oh, Coke, 10.1% up. AIG. So you can see Halliburton. So you can see that. The rest, red. Apple down 1.5%. At one point, it looked at a disaster scenario too. If I zoom out to the S&P 500, it's not any better. Russell 2000. That's a basket of 2,000 stocks. You see a lot of green. It's kind of mixed, and it looks it. This is the NASDAQ. Look at the healthcare. Shellacked, 2.5%, almost 4%, Celgene. Biogen, down 2%. Amgen, down almost 3%. That was Gilead. Alexion, down almost 4%. Regeneron, almost 2%. Vertex, almost 3%. Yeah, hideous. So the IBB is definitely down. consumer staples, including Kraft. Telecommunications, never mind. And then you get discretionaries like Starbucks. That's a big box. It's down over 1%. Priceline got an upgrade today, rallied, closed way off the high, and we'll talk about that a little later. All right, so this is the heat map to tell us where to. So here's the action today. It opened, we had a pretty ugly pre-open picture, but the open was nice, and it even went strong, and then we bailed out of the strong right away. We put in the party hat. We tried to put in another party hat, but it failed worse than the time before it, and then right here, whooshed all the way down. We avoided the disaster right here because this spirit is like a head and shoulder-ish pattern that had potential 2055, I said, and it got to 2056 and more from there because of Apple. Here's Apple. Let me zoom out. Sorry about that. Started strong. Closed not so strong, about, what was that, $2, almost exactly off the high of the day. Why? Okay, this is a line that could have caused a lot of trouble, and it did. However, it held it. I thought from here it was headed to 122, but somebody stepped in and started buying it. And that's why. When you break a trend, you tend to overshoot. That's why I thought it was heading down to here. That's still no good, folks. Look, I can draw a line here with lower highs, and now it's tightening, so it's not a good, pretty picture. I mean, long-term, it's a great company and all, but there's no conviction, not even in Apple. Facebook, look at that, opened down, 82.42, I think it was, and then rallied all the way green, happy, 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 and then look at that, igloo. If you drew it like this, not a good happy tune, and it closed at the lows. Not good when you close on the lows. NASDAQ, not any better, just like the S&P. It had this. We saw this coming, and guess what? Look at that, 43.20, 43.20. What does that bring in? Yep, you guessed it, kryptonite. That's 4300 line that I've been calling kryptonite for a long time now, and I'm going to zoom out to, let's call it 180 days. That's even not enough. I'm going to zoom out to a year. It's going to look very busy, but you'll see why. This is it right there. That's a whole year, right? So if I zoom in a little bit more, you'll see bonk, 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 and then broke out for a period of time. Party hats, NASDAQ by 1,000, bonk, right back to it. Not a good sign. Oil today, we punted the problem from oil into next week. Why? Because the deadline was extended for the Iran deal, because they made enough headway that, okay, the spirit of the deal is still in the works, so they gave it another day. Tomorrow, if we don't get a deal, oil is going to climb. If we get a deal, oil is going to crash, because that would lift the sanctions off of Iran, and that would bring a ton of oil back on the market from Iran, and I bet you they need the money. So they don't care how cheap oil is. They're going to bring it on. So that could be very, very bearish for oil, even in the 30s. All right, so weakness was spread among all sectors, except for spotty strengths. And lately, the rallies have been of the relief kind. And those are shortable rallies. Eventually, we will need a reason, fundamental reason why we should buy the market. Until then, I'm more comfortable shorting than going long. Okay, political variables. Now we're talking variables. This is what happened, okay? So the variables are still, the political has a huge importance for me, because we're not giving enough importance to what's going on in the Middle East, especially in the Yemen situation. I will post a link to a video on CNN talking about, saying things like, and I'm quoting here, escalation is almost but a certainty. Okay, 9 Arab countries will be involved. Those are their words, not mine. Okay, that's a lot of Arab countries. Okay, ground invasion could be imminent, maybe even this week. Those are their words, not mine. These are scary statements for me, folks. I know. So that's one variable. The other variable is the economy. We talked about ADP focus tomorrow. Let's see. I think the markets want good news. The Fed still rate hike. It's coming this year, and the markets are still have blinders on that statement from Friday. I don't know why. Euro was weak today. That's not good for dollar. Obviously against the dollar. That's not good for U.S.-based companies, because they're at a disadvantage now. This will more likely make the earnings season a little scary, because they're not likely to say, oh, things are looking great, we have no issues going forward, we're going to raise our guidance. Everybody's going to cut guidance. And let me tell you, they all have slush funds where they carry bad results. They hide them until they get an opportunity to ditch them, kind of like hiding the report card. I may have mentioned that before. From your parents, because it was bad, you wait for the second report card, which could be good, and then you show them both. Not a good idea. But they'll throw everything in the kitchen sink, so to speak. So the QE in Eurozone is still going. We have no word on it. The Iran deal, we talked about it. That's oil. The bonds were strong today, and markets were kind of confused. They ran up in the morning with strong bonds, ran down while bonds continued rallied, and then ran down while bonds were rallied. It's just mixed. They don't know what to do. So I'll just say that bonds are strong, rates are low. The 10-year yield lost the 2, almost lost the 1.9 today. Ranges. That's where the meat is as far as ranges are concerned. All right, let's talk ranges. Let's start with the SPY, which brings in a pretty bad situation. I think if we lose the 205 in the SPY, we're going to have a correction kind of like this one. It wasn't a disaster. It was 10% from top to bottom, which is, let's put it this way. The 200 would be, will come into view, which is not a big deal because, look, this is what it just, let me extend that. This will be important, come into view. So lose 205 emphatically, that green line. It could be higher than 205 if we wait a little longer, because the green line extends up. Then this brings this area into view. This is an area that we've defended before, we as in the bulls. I told you I'm not a bear. I'm not a bull either. I just want to sell spreads, and I want them to expire as close to worthless as possible. Lower highs, not good. Heavier volume than yesterday and the day before that, not good. As heavy as that day and that day and that day in red, and then some. So not a good day for the bulls right there. That is 1 year worth of movement. Okay, if you want me to zoom in, I'll show you that. You can see it better. Okay. Why do I say if we lose 205? You've heard of head and shoulders, right? This is a head and shoulder-ish pattern. Maybe not technically head and shoulders because of all these spokes, so the neckline is not clean. I don't care. I care that they tried to run and they failed. They tried to run, they got better and they failed. They tried to run, they didn't match the time before that, or at least just, and then they failed. Now the bulls are tired. If they lose it, they overshoot. I'm not calling for that as a forecast. I'm mentioning it as a potential scenario that one needs to make room, for which one needs to make room. Similar setup in the NASDAQ. These are the Qs. Volume heavier than yesterday, also not good. I think we need to hold 105 because that's the trend that we held for a while. And if we do lose it, then this area comes into play pretty quickly. And just like the ES and the S&P, this is an area which we've defended before. Therefore, 105 area could be higher if time goes by. Is basically defending this line is very important. Let's look at the small caps. They have held best. That's their all-time high. Look how close we are. Now, this is an indecisive candle, meaning they don't know what to do with it. We'll go back to watch candles over there. We had a huge leap up here, and this one negates it. Not the end of the world. Lower high, higher low, which is good. It's all engulfed in here. Kind of like wait and see. They're waiting for the indices to join it. If they don't, they will drop down. Let me go back to the NASDAQ. Lower high, lower low compared to yesterday. Not good. And close that little gap that we had here. That's not good. And let's look at, and the candle's not good because it opened here, tried to run, that's that little tail, and then closed on the low, an absolute low of the day. It couldn't have closed any worse than that. Let's put it that way. Let me see, S&P, that's just as bad. Longer tail up top, meaning they opened here, they ran to 208, and then closed at the low of the day, or close to it. Not good. Okay, so these are the ranges that I've looked at for today. I do have a lot of names I want to cover, so that concludes the review of the day. However, we have a ton of names, and if you don't want to hear that, you can check out, but I think there's some good stuff there. I promise I'll rip through them. I promise. Okay, so these were in the middle of the day, so I may have to refresh. This was Facebook, okay? Facebook had a bad close because of the potential it had today. But it brings this line into question. So what's it going to do here? That's my question in Facebook. That's how I trade it now. This was prior resistance, then broke out of it, now became support. And here it is being tested as support 3 candles in a row, 3 of 4 candles. I want it to prove to me that it is support before I go long it, to believe that, yes, it wants to revisit that red line up here, which is closer to 86. Otherwise, if it loses it, I think it can whoosh down to here, which is an area of support, previous established support. So it's an important line. The yellow line is an important line. Plus, what makes it harder are these two candles where I put an X. Look how quickly these two candles came, and this one. It's like chutes and ladders. Ladder, shoots. We didn't spend much time trading these two candles, so maybe markets will whoosh down just like they came up. All right, so that's the range. All right, I'm watching that. That is Facebook. That's one. And then we look into Apple. It needed to hold this level today, failed from it, but it didn't miserably fail. I thought as soon as it cut the level right here, it would run to 122. It didn't. It saved the day. However, it still had a nasty red day. Visa, somebody told me about Visa. See, it was green. It did not close green, folks. It closed red, and it closed down 0.3, so almost a quarter down, quarter dollar. So not good. 65.4. I needed to hold 65. And look at this. We had an open gap here that kind of filled the next day with one tail. That was pretty incredible. I thought it was worthy of note here. These are questions that people ask me, and I'm answering. All right, another question, GoPro. They're saying, what do you think of GoPro? I did a write-up on it, so you can read it. I think it's meandering here. I don't like the company. I have a couple of cameras, but I wouldn't buy any more. They're mediocre as a camera. They're great as a waterproof camera. But as a camera itself, it's not the best, period. That's all I have to say. I wouldn't chase it. I need to see it break this level. It broke the downtrend, but where's the new catalyst going to come from? I need a new story. Give me a new story, I'll tell you it goes to 55. If not, it's not exciting. Credit call spreads, no. Shenanigans went into the VIX today, VXX. Look at that. This was such a big move that they actually halted it. And don't know what's up, fat finger or what. Shenanigans. I thought I'd bring it up to you. I saw this on Twitter. Brazil. Not enough people are talking about this. I thought it was important. This was the correction of the financial debacle. This is the Brazil, the EWZ. That's an ETF that kind of represents Brazil, like FXI represents China. Guess what? We climbed so fast and we crashed so fast. That is an incredible correction, right? And then we got out of it, and we're back down to catastrophe levels. This was a catastrophe, right? But the rate of descent is different. The slope is much less steep, obviously. But it's important to point that, is this a bottom from which we're going to bounce, or is this a scary level that more downside is coming? I thought it was important to note. Chesapeake, somebody asked, too violent for me. You know, this is what, 5-10 years? I forget how much is. I mean, there's no story here. The only reason you would want to go long it is because you believe the company is not going to fall apart and disappear. In that case, debit call spreads, I guess, or buy the company is $14 for crying out loud. But you got to be willing to walk away from the money. So it's not for me, but somebody asked my opinion on it. These moves, look at the heavy volume. I mean, these are legit moves. I don't know how I would trade it for myself. If anything, just a lottery ticket if I believe that oil is going to bounce back up. So this will move. It moves in sympathy with oil, so tomorrow could be a good trade in that one. It's just a coin flip. I have enough on. I don't need it. Amazon, somebody needed to be short, and indeed it was green today, and then it finally closed red. Here's the thing with Amazon. I think it needs, almost like Facebook, it has one level that I'm watching. It's 365. If it fails, it could whoosh down to here pretty quickly, which will bring down the talks of, oh, open gap needs to fill. So it's a really good debit put spread lottery, cheap one, to short the markets too, because if markets collapse, you can rest assured this is going to come down here pretty quickly. So that's a huge drop, 365 down to 325, 20. I bet you we can find some cheap debit put spread to play every week until that happens, right? I'm just saying. All right, Chevron, I thought it was interesting that they were green during the market oil down day. Today they reversed, so still a coin flip for tomorrow. Just be careful. Tightening ranges, so maybe the range is 110 to 104, but if oil drops, I mean, there is a floor under companies like that because of how good they are perceived, but it is a rigged market, and I can't fundamentally trade this. I may want to trade it as a vehicle to short oil or go long oil, but there are easier trades out there. All right, so these are some of the names that I wanted to go through. Let me see if I missed any. Somebody asked me today if I believe that GoPro is a short, why wouldn't I do a credit call spread? I said because I don't want to get in fighting somebody who is overzealous on chasing GoPro, therefore makes my credit call spread dangerous. I'd rather, there are easier trades out there is what I was trying to say, I guess. That's nothing more, nothing less. It was a great question. Facebook, we already talked about that. Twitter, interesting point. Twitter was okay today. However, except for the fact that, look at that ugly candle. What does that mean? It means that they opened here and they closed here, which is good, right? That's green a little bit. However, they left all of this, meaning they tried to run it all the way to almost a 52. You want to see it in action? Here's what it looks like in action. I'm short Twitter via puts, right? Obviously, I'm losing money on those. They were green for 1 second, but then, anyway. So look at that. Ramp to 51.24 because CNBC was talking them up all the way to here, and then fizzle all the way to here. That's not good, okay? And here's another thing. I saw a note from Doug Cass, a permabull, a good guy, but he's always, I mean, perma-bear, always bearish on almost everything. He said that he's long Twitter, short something else. All I read is, I'm long Twitter. I was like, okay, so if the perma-bear is long Twitter, is there anybody left to buy this stock? I don't know. And looking at it from a perspective of ranges, I have a lottery ticket in it, meaning my short doesn't cost me a lot of money. I'm happy with my short. All I needed to do is break 49, and it gets down to here pretty quickly. And today's candle did not do it any good as far as technical. If market's correct, it will come down, and my puts will pay. But again, it's a lottery ticket, therefore I'm not broken up if I don't make any money on it. It's a small investment that can yield a pretty nice return. It's small enough for me not to worry about it, and good size enough as far as reward for me to be really happy if it pans out. All right, that's long enough. Nick, I know there are a lot of new people. Ask as many questions as you can. Send in your request. I answer all requests.